Hello, everyone. Today, this is Mitt here from Profit Makers. I have Vernon. We're going to discuss about a trade today and strategize it and see what we can get out of it. So, what's the trade we're going to discuss today, Vernon?
Yeah, so we'll start with GTN. So a little background on this one. It's called Gray Television. We'll kind of give you a little backstory. I live in the Metro Atlanta area, and we have two upcoming special elections, and it's important because the two special elections are going to determine whether the Democrats can get a majority in the Senate or whether the Republicans keep control, right? So that so split government favors the stock market, but either way, I'm going to try and monetize this a little. So Gray Television GTN is the ticker. We're expecting a lot of money to be funneled by both sides into ads for the four senators running for election. So I have a 1750 February 19, 2021 option. What I'm trying to see is I planned this out to be based on when their earnings is, and it's sometime in February based on what we're finding. I'm trying to see if it's the best optimized one based on like what you suggest.
Okay, so February 19th, can you see my screen?
I can, yeah.
Okay. So February 19th, 2021, 17.5. It's trading around $1.50. What was your cost basis on that one?
$1.01.
$1.01. Okay, that's pretty good. So now this is about 98 days away. So that's about
past 45.
Past 45, which is good. Let me look at the data. It's the heaviest data actually. So if this doesn't move a lot in the next few days, you're going to be impacted slightly by theta, but not too much. Let's see delta. Yeah, delta is like, if it does go up, man, like it's going to grow really fast in delta. So I can see that happening. And let's look at the extrinsic value. Okay, there's a lot. Yeah, that's like the ultimatum of extrinsic value, so you could lose a lot. What are you so you're gonna stay bullish through when? What's your time?
Around mid-February, around when those earnings come out.
So are you expecting it to like run up to that, like as we approach February, or are you thinking it'll like run up in?
Yeah, I'm thinking my target's like 20, but I think that might be a stretch. But also they haven't fully recovered since their like plunge and like the COVID plunge in March.
Like halfway there, right? Halfway.
Yeah.
You can see that halfway there. Okay, fair enough. Now so this is okay. You're in here now. What can you do to kind of alleviate? What is the bottom? Do you think this thing can run back down to like maybe 12-ish?
Yeah, I think that's definitely possible. I think part of that pump that you're starting to see right there is right around when the election started.
Okay.
And it looked very obvious that like even right on November 3rd, it looked very obvious that it was going to be a split Senate, and that and I think most people, well, I don't know if Wall Street knew, but like me being from Georgia, I knew that you need 50% to get him to get the seat. So I knew that both were going to go to a runoff. So and that's around when I saw that price starting to really skyrocket there. Not skyrocket, but it went from 13 to 17 rather quickly based on that.
And actually, there's not much liquidity here. This is not a good, in my opinion, this is not even a good options play when it comes to premium selling. You see, the thing is the liquidity is very, very low. Let me look at the open interest. Yeah, look at it. Not too many players actually buying calls and puts on this company at all. But that's fine. If
Yeah.
you wanted my opinion, I would say, yeah, this is probably a good idea we can do. You think it could reach like around 20, right? Okay,
Mm-hmm.
fair enough. So maybe you can reduce your cost basis by selling. I would do, yeah. So you paid about $1, right? So you could
Mm-hmm.
reduce the cost
Yep.
basis by selling a put and a call at 15 and 20 in December, right? So that should give you around 45 to 50 cents, somewhere around there combined. So guess what this does? Like your call contract that you're buying, if this
Mm-hmm.
stays between 15 and 20, okay, then
Yep.
you're going to cover half of your
My cost
position
basis, right?
cost basis here. Now, the $1 million question you'd be asking, like, hey, what if it runs up to 20? Like then I'm limiting myself on the top side
Yeah.
for 20, right? But you're comfortable with it reaching 20 and exiting, but let's say you want to run up further, right? So then when we reach the 20 mark, like maybe 2 weeks or 3 weeks into December, right, closer to the expiry, and we're already at 20, you can roll this out and collect a premium out in January because you have a February contract, right? So
Yep.
you have also one January cycle in between that you can jump into. And you can do that on this. And if it does the same, if it goes down below 15, you can go ahead and roll this further down to like a 1250 or a 10 in a outer cycle. Actually, you know what? This doesn't have January, so you'll just move it to the February contract pretty much.
Okay.
So what
So
happens is if the price goes up, you will be able to roll it out to a February contract. What was your question?
oh no, I was gonna say it's also worth mentioning that I also have a May $20 call for the same ticker, and
Okay.
I don't know if I can. Is there any like more optimization with like both of them, like liquidate them both,
Yeah.
and
If you have the May one, then what you can do in the May one is which one do you have for May?
the
17,
20 strike? Yeah.
20. Okay. Um, yeah. So I would do the same thing. The one you're doing in December, okay?
Mm-hmm.
You would do the one in February, okay? And the one in February, you can actually go further out. You can go 22.5, okay? You can go 22.5 and you can go
Mm-hmm.
at 12.5, right? So maybe the one that is closer, which is the one in February, you do a closer band. The one for May, you do a wider band kind of thing.
Yep.
And then when we come closer to February, but like if we're in December or January, and let's say it just started skyrocketing or something, then you can roll out the one that you have to a February one, and it will be now you'll probably have two positions on that side versus one position kind of thing, right?
Yep.
So yeah, you can definitely do that. And the other interesting thing which you probably will notice is as we go further in time, more contracts will be listed,
Right.
right? So we're only until May, right? So you will see a June contract show up as well later on, so you'll have more listings. If you wanted my opinion, um, this is not really a good good ticker for premium sellers because of the liquidity concerns, right? Like the
Yep.
reason I say that is because there are very few contracts traded,
Mm-hmm.
and you may be stuck in the trade for a while, or you can't exit it until the expiry. So you have to be ready to hold on to that position till like the expiry date and not not
Right.
liquidate your money. So
Right. It's kind of a stealthier play.
Yeah.
And the smart money's not in it yet, so the dumb money people like me can swoop in or fail.
Or
Who
you know
knows?
what? If you think that this thing can run up, just like in the short term, like that's why I asked you. The first question I asked you was in the short term versus do you think it'll happen closer to February? You think the smart money will start coming in December, January? Depending on those assumptions in your mind. Obviously, everyone has their own assumptions, but
Yeah,
based on those assumptions, you can decide to leg in on these strategies a little bit later versus doing it now. Yeah,
immediately, right? Yep,
yeah.
that
So
makes
you
sense.
have a lot of time to do it, but it's just a suggestion kind of thing at a pretty high level. Yeah.
Yeah, very cool.
Yep. Cool. Any other questions there?
Nope, that was it. Thank you.
Okay, no worries, and it's good having you here.
Sorry, my internet just cut out there. What did you say?